Hello and welcome, everybody. Today, my guest is Nicholas Yeo. Nicholas is the head of Equities China and Abrdn. And today we want to discuss recent developments in China. Welcome, Nicholas.
Thank you. Thank you for having me.
Nicholas, the Chinese Communist Party Congress had a lot of political undertones with Xi Jinping's third term and changes to top leadership. How do you see policy impacting China's financial markets and companies now?
Yes, the Congress has created some concerns with regards to the check and balance on the government longer term, because the Congress has shown that he has reached the peak of his power consolidation. That is a long-term concern that we need to wait and see and monitor. However, in the short term, given that the execution of the policy has been poor throughout the year, now that the personnel have been confirmed, and now that a lot of his men are put in place, the execution of the economic policy could be a potential surprise in the short term. This will be over 6 to 12 months. And it will be something to watch out for in the near future, especially with the Congress, the National Congress next year in March, where the longer-term policies will be announced.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now. China is focusing on domestic demand and high quality. Is this sufficient to achieve the self-imposed ambitious growth targets in a slowing growth environment?
No, with the Congress, some of the key messages were building a modern socialist country. That means, relying more on a domestic consumption story in China. And the second message is national security that will include technology and being self-sufficient in energy as well. And lastly, on innovation to take the country beyond the middle income threat. Now, all these point towards a country that will become more self-sufficient. So a slowing global economy may not be so impactful on China if it focuses on recovering, stimulating the domestic economy to help it to recover. And that will be good enough for the country to have a better GDP growth in the coming years.
Why is China persisting with this zero COVID policy despite an already slow economy? So during the last couple of days, we heard some rumors. So do you expect any short-term changes here?
Now, the zero COVID strategy that China is sticking to is due to a couple of reasons, and mainly medical as well as political. On the medical front, it is due to the fact that there are not enough intensive beds in some of the lower tier cities or even in the upper tier cities. So there is a need for the infection to be controlled. And secondly, political as well. China continues to rely on the domestic vaccine. That will take time for the vaccine to develop and the elderly to be vaccinated as well. Once the vaccination rate has gone up for the elderly, and we see that there is scope for China to continue to ease the zero COVID strategy, but it will be a very gradual easing process because China cannot work from home. There are many workers that need to go to factories, so there is a need for infection to be controlled when it starts to ease. And that is what we are likely to see, that it could happen after spring next year, but the easing will be a very gradual process.
The yuan has lost 12% against the US dollar in the last couple of weeks. So how is the current currency risk for Chinese equities?
Yes, the renminbi, the Chinese yuan, has been depreciating against the US dollar. However, the way that the Chinese government or country manages its currency is not against the US dollar only. It is against a basket of currency where it has a trading relationship with. So US is one of them, but of course the weight in the US dollar is coming down given less trading relationship with the US going in the longer term. So if you look at the currency of the Chinese currency versus the rest of the Asian currency, it hasn't been that weak. And there is room for the currency to be more competitive against the yen, against the yuan. So I don't think that is a big concern for the government, and it could make Chinese export more competitive comparing to the neighboring countries in Asia.
So the Chinese property sector has kept markets sleepless during the last months. So what steps is the Chinese government taking to stabilize the troubled real estate sector?
Yeah, the Chinese real estate has been going through a process that we call deleveraging, reducing the credit that is going into the system in the real estate market. We have, first of all, to give credit to the government in terms of persisting with the deleveraging of the real estate sector despite the economic weakness in China. Because if it was not to deleverage the real estate sector, you could see a repeat of a Japan property bubble that happened in the 90s. So China is persisting with the deleveraging of the private sector developers' credits. But at the same time, there is also a risk that the deleveraging on the supply side, on the developer side, may also hurt the demand sentiment. So that's where the Chinese government is doing a lot to spur or to stabilize the demand for real estate. And they have come out with a number of policies already, such as making it easier for upgraders to buy a new flat or buy a new house in China. And we could see that happening after the Congress, now that we have personnel being confirmed to have the mandate to execute some of this process in a more vigorous way than what we have seen before the Congress.
Chinese equities are having a pretty bad year so far. Which Chinese companies are coping well with the current situation, and where do you find investment opportunities in China currently?
It goes back to some of the key messages that came out of the Congress that President Xi was communicating with China and the rest of the world. It is about building a modern socialist country, where there is a achievement of or attainment of a moderate, wealthy population by 2035. So with that goal in mind, that is where we see long-term opportunity with the domestic consumption upgrade story. So that is still one of the big area. He also mentioned about national security. And national security is not just military security. It is also becoming more self-sufficient in technology, especially semiconductors, more self-sufficient in energy. And that's where the renewable energy continues to get support from the government. So renewable energy, technology, software and hardware, consumption story, these are the three main pillars of opportunities that we can find. And lastly, the population is aging and getting wealthier. So healthcare as well as wealth management are also big areas of opportunities for us. And these are the ones that we continue to see very good growth despite the economic weakness.
So China, you mentioned it, is looking inwards to improve, especially its technological capabilities. So in which areas does this create investment opportunities? And do you have some examples for us eventually?
Yes, on the technology front, the country continues to be reliant on the import of a semiconductor. For example, China imports about 260 billion of semiconductors. That reliance on foreign produced semiconductor doesn't sit comfortably with the Chinese government. And as a result, the Chinese government wants to develop the semiconductor industry, and as part of a self-sufficiency, as part of national security. So one of the ways to do that is to promote some of the what we call the little giants in China who are involved in semiconductor production. It will not be the ones that are producing semiconductors that we focus on. Instead, we focus on the equipment makers, equipment producers that provide to the semiconductors foundries that produce the semiconductors chips. These are the ones that are continuing to see great opportunity, as a lot of these semiconductors equipment maker are replacing the foreign imported equipment. And the government is supporting the localization of such technology by giving tax rebates. So we have examples like SG Micro, Star Power. These are all the examples that are benefiting from such a localization trend. At the same time, on the technology front, you will not find Chinese companies continuing to use foreign imported software like SAP, Oracle. There is a shift away from this American software to Chinese homegrown software, mainly for national security reasons. Examples would be like Yongyou, which is a ERP system, enterprise system that will replace SAP. And we also have cybersecurity companies such as Venus Tech that will replace, foreign cybersecurity software. And that's all in the name of national security. And these software and hardware companies will benefit from the need to be more self-sufficient due to the US-China tension.
So this was Nicholas Yeo, Head of Equities China at Abrdn. Thank you very much, Nicholas, for being with us today and sharing your insights.
Thank you very much for your time, and thank you for having me again.